Deep sell-off.
So let's talk to our Fox panel about it, see what's really going on. Fox business contributor Charles Payne. We have Gary Kaltbaum of GaryK.com, Victoria Barrett from Forbes, and Tobin Smith from Change Wave Research, along with Peter Schiff, author of Crash Proof. Peter, your beloved gold is down today, but so are the markets. What do you think's at work here?
Well, first of all, gold is up in terms of the stock market, so the Dow is losing more value than gold. And, gold's still in a bull market. Stocks are in a bear market. But, there's a lot of problems out there. Look, you got the terrible ISI non-manufacturing number that confirms, again, that we're in a recession. A lot of people are still clinging to the fantasy that we're not in a recession. And you've got a lot of warnings now coming out with the credit card issuers. I've been talking about that for months on this show. There is a huge crisis building in credit card debt. There are tremendous losses there. Credit card companies are really going to be tightening up on their lending standards, cutting back on people's lines of credit. And people are starting to realize what this means for an American consumer-based economy where people only spend if they can borrow.
Well, Charles, these numbers from the ISM are bad, but even the chairman of the ISM said you have to see how this trends out before anybody gets too excited. Well, obviously the market got pretty excited, but even the head of the institute that comes out with these numbers is saying, hey, folks, caution.
Caution. Also, you know what? If you I looked at the report, and one of the things that kind of struck me is, and with some of the respondents, it seems like they're reacting to the possibility of a recession, so therefore they've constricted their activity. In other words, if we're not in a recession, they're bracing for it, and sometimes if everyone does brace for it, it makes it a self-fulfilling prophecy. And so to Peter's point, we've seen the credit cards, we saw a downgrade of the credit card issuers yesterday, but you look at MasterCard, that stock has been performing exceedingly well in this environment. The other guys have increased their loan losses, but not to the catastrophic point that you would see reflected in the stock market right now.
Tobin, if what Charles says is correct and that it is a bit psychological versus with the real data behind it, do you then suspect that if we were to dip into recession, it would be a very short one?
Well, Liz, if you look at sort of compare 2001 where we are now, what's intriguing is 2001, we had the business spending, drop off a cliff. Consumer spending stayed pretty strong. And really, obviously, housing became the torchbearer, if you will, of spending. Now we're in a completely different place. We have business spending sort of hanging, flat, maybe a little bit up. We have consumer spending coming down. Part of what, the whole point on credit cards is, yes, we are having a constriction, a tightening. We came out today, they interviewed 300 different savings and loans and banks and said, have you tightened your credit restrictions? Almost to a T they have. So that tightening down changes. Obviously, the housing market's down. So the real savior here would be is if the consumer will pull back, but not too much. That gives us what we're forecasting, which is a negative Q1, a negative Q2, and then obviously the Fed is going to be at probably 2.5% interbank rates in the next 30 to 45 days. That's going to really be the floor of the market.
Yeah. Well, Gary, does it concern? We just heard from Sandra that there's 100% certainty now, at least by one group of folks, that there's going to be another 50 basis point drop by the Fed in the Fed funds rate. Does it concern you? That would be 2.25 points down within 2 months. That's a huge drop. Is there any concern there?
Well, look, as you know, I've been telling you that they were going to be very aggressive. I predicted it in intra-meeting. I believe they are going to go down to 2%. This is a Fed that has dropped all pretense. They care about inflation. They're looking at the economy. And let me just say this. I would like to put a positive spin on it, but that ISM number was really bad. We are going to have a negative growth number in the first quarter, probably in the second quarter. Whether or not it gets really bad or not, I think the market will tell us. If the market goes and breaks the lows we just saw about 11 days ago, that's going to tell you the recession is going to be a little nastier than expected. Now, let me say one other thing. My company's research, we go out and we are touchy-feely and we speak to all kinds of businesses. Business is not very good at the retail level right now. The consumer is definitely pulled back. When I speak to the companies that sell appliances, very bad. We already know about housing, so we are definitely in a downtrend right now. And when we come out, beats the heck out of me. But the Fed is doing everything they can. Not sure it's going to work.
We're all going to die. We're all going to die.
No, nobody said
Victoria,
that.
wait a minute. I want Victoria's opinion on. No, Victoria. Never mind.
No, the Fed's going to make it worse.
The Fed's going to make it worse,
They're
Peter.
add more.
But you look at what's happening right now, and there are a lot of people who say a couple of pieces of weak data. Here come the stimulus. What do you think that might do?
Well, look, the stimulus is going to make it worse. All they're going to do is run bigger budget deficits. We're going to borrow more money to send it out to Americans and hope they irresponsibly spend it with all the money they've already irresponsibly spent. I mean, we cannot get out of this mess by doing more of what got us into it. Unfortunately, we got to tough out a recession. It's going to be a doozy, but we've got to stop all this spending. We've got to stop all this borrowing. We've got to start producing and exporting and saving.
Peter,
Go ahead, Gary.
You contradict yourself. First you say the economy's going into the crapper,
It is.
but don't lower rates. You say let's raise rates, which makes absolutely no sense.
No, it does make sense.
I would agree with you on the inflation front, but the Fed is in a box right now. They have to make a decision, and they got to weigh inflation versus economy, and the economy's got some problems here.
There is no trade-off between growth and inflation. Real economic growth causes prices to fall. What makes prices go up is artificially low interest rates and excess money printing. That's what the Fed is doing. Yes, the Fed needs to be raising interest rates, and yes, we're going to have one hell of a recession. But there's nothing we can do about it.
Before we get entirely negative on this, I just want to point out one thing that was also in this very same ISM report. They asked respondents how they felt about the next 12 months. In response, 42% said it would be worse, 42% said the same, and 16% said better. Now, Toby, that means 58% of the respondents said sometime within the next 12 months things are going to get better.
Well, listen, another perspective on this, but this happens to be a fact. In 01, Greenspan waited to cut rates till 03. I mean, they were way, way behind the curve here. Here we had the Fed cutting rates 4 months before we got to a negative rate. So they are probably 2 years ahead of where we were in 01. And that's why, irrespective of Mr. Schiff's idea of whether we should be cutting or lowering, they're going to be cutting, and those low rates will be coming at the same time. We're in a refinancing mode. So you can make a strong case that they were there early and they were there strong, and that they will put a floor under the market around the 11,500.